All right, rock on. Welcome to the Independent Investor Channel live stream. My name is Ryan. So good to be with you guys on a Friday night, man. This is typically the quickest 2 hours of the week for me, getting to talk about and engage in my favorite topic. Honestly, I'm so humbled at the opportunity to offer this message. There's typically a little bit of an interest for me on how to leverage this YouTube opportunity. And how others look to leverage their opportunity. YouTube is an interesting opportunity. It really is. It's not like what you get out of a 2 hour or 1 hour sitcom. You know, you've got your guilty pleasures if you're watching, whatever, a football game or a basketball game for entertainment, etc. A sitcom, you watch it for entertainment, boom, you walk away and you can't remember it the next day. I think the interesting part about this particular opportunity, at least what I'm trying to deliver with regard to the product here, is that you can engage a little bit for a couple hour time frame during your week and then walk away from it changed. I can't generate that type of content every single week, but hopefully there's a few things that I say that resonates with you and gets you thinking a little bit. That's really the mark of a champion for me, to be honest with you. And it really dawned on me today when I was reviewing a piece of content from GW Life. So Jerry's in the group, and I'm going to give Jerry the second call out, first call out of the live stream for 2 weeks in a row, because he deserves it. Okay. Really got me thinking with regard to his video. And if anybody has not checked out Jerry's new video or his channel, highly encourage you guys to kick over there and kick onto this piece of content. It really makes you think. It really does, about people who offer a real impact in your life. And I think all too often us as a society are defaulting to people who we don't even know, right? Movie stars, etc. People who seemingly have these perfect lives on the surface. And I think all too many people are aspiring to that type of thing. And I think if you take a step back and really question who those influencers are in your life, I think you could probably look a little bit closer to home with regard to friends and family who've really had the most impact on your life. And I'm talking about impact that matters. I was specifically humbled when he mentioned my name. That honestly kind of spoke to me. If there was any payment that I could ever request on the channel, or at least solidify why we're doing this message, it would be just that. It would be to have somebody respond back to you in a way to say, look, something that you said stuck with me. Maybe even I heard it wrong, but I'm using it in the right way to empower my life. And maybe perhaps I wouldn't have done that had I not come across your message. I think that's powerful. And that video got me thinking. So I thought I would shout it out on the first go around here. I know Jerry's in the group here as well. So anybody that kicks on and checks out the live stream after the fact, we're getting to just over 300 people for every 100 million people in the United States alone. So we're really making an impact here on the Independent Investor Channel. But for those that are making their way, hopefully we're giving that level of message that is at least got the potential to resonate after you're done and after you've gone about your way. I think those are the most sticky messages, ones that you look forward to. And I tell you what, if we're evolving to a message like that, I'll be forever humbled and honored to continually try to seek that level of impact for people. I don't know, guys, for me personally, it's my way of fighting the system a little bit. It really is. And I hope you guys kind of look at it the same way, because of all the condescending messages out there, it really starts with me on all of the financial planning advertisements, all the financial institutions out there, all looking to win your business with as little time vested in you. Really, all they want is their money, is your money under their envelope. But I contend that there's a different way. And if you can really justify for yourself the opportunity that exists with self-directed investing, I think the quicker you can validate it for yourself, I think the better off you'll be. And for the few people that make their way onto the message and are lucky enough to do so, there's going to be even fewer that actually hear the message enough to deploy it, or they put themselves aside for just a second and hopefully push some of the barriers that may be in their own way aside long enough to where they can really hear the message. Okay. And for a lot of people, that's very difficult. A lot of people are stuck in their ways. That's fine. I think that can be one of the biggest roadblocks to success, is an inability to evolve and train your thought in a way that allows you to improve yourself over time. And that's not just with regard to money. I think once you've got this money aspect tamed and disciplined, I think that can really render itself as a positive to other aspects of your life as well. I think it can really drive some of the decisions that you make in life. I think it can drive a lot of what you're looking to achieve in life. I think it can help you drive a lot of getting your financial goals and mission statements down on paper. I had to reset the live stream before I came on, so I lost some of the preliminary comments that came through from one of my favorite subscribers, Phenom1, who asked the group, or at least challenged the group, to put down on paper a mission statement with regard to your investing perspective and financial goal going forward. I took the liberty of doing that. I'll share it with you during the course of this live stream. I do have a lesson to provide tonight. It's going to be very interesting. It's going to be centered around my portfolio, some of the allocation strategies that I'm deploying, some of the fine tuning that I've done with regard to this market, obviously off a couple ticks this week. Everybody's talking like the market's going down, it's just like falling off a cliff. I'm not really sure I understand that. The money must really, really be good for the networks to try to drive fear in for consumers of the market news, because I don't understand. I mean, this systemic threat we have with the coronavirus is real. It is real. Okay. But the market hasn't figured it out yet. Okay. And I don't know if it's going to blow over before the market figures it out, or if it's going to become part of the systemic risk that's actually reflected in equities pricing within the stock market. I don't know yet, but I would contend that the numbers that came out today were a little bit more economically driven. I think there was a little bit going on in the bonds market, enough to get folks' attention. With the 10-year yield falling below 1.5, that was an interesting earmark to me. I'm making a pile of money in my bond portfolio, as small as it is. It's ironic that the only bond holding that I did not have was long-term duration, which is killing it. The TLT, I believe, is up 30% here in the last 6 months or so. You guys can check me if I'm wrong, but TLT is the iShares. You guys know I like EDV with Vanguard, but the remainder of my fixed equities portfolio is just smoking right now. It's killing it. And those are typically telling. It'll tell you a lot with regard to the inflows record over the last couple weeks into bond funds, but we'll get to that. Obviously, this is a collaborative live stream. If I don't have the opportunity to have someone kick into the live stream with me, which I'll throw another invitation into the thread, then I will run the live stream myself. You're giving me all the permission to be selfish and run it in the manner that I choose, but certainly want to kick out the opportunity for anybody out there. And don't be shy. Kick in here. Let's have some fun. Most of the channel creators have already made their way into the live stream with me, but it just adds another dynamic of community building. If you wanted to take the opportunity, I just saw Brent pop in here. Might be Brent's night to pop in here finally and get to engage a little bit with me, as he's been with the channel not months but years since the start of it. And I tell you what a special opportunity to come on and engage with you fine folks. There's a second call out or shout out that I want to make. I typically try to make those within the first 10 minutes for the benefit of the channel creators. But JMac Investing is that investor. I want to give just congratulations, to be honest with you. And I don't want to say anything that's going to embarrass JMac outside of what was released during the about $16,000 in debt that was paid off. I think that's brilliant. I don't know if there's a more fulfilling way of making yourself, putting yourself on a different path, really. Because I know JMac at the end of that video really talked about how consuming that can be. And I speak about debt all the time. I'm a fan of credit card, but I was amazed at the end. Him and his wife rolled out the listing of credit cards, and that takes some freaking courage as far as I'm concerned. And anybody that tuned into that video would have been wiser to maybe relating with that situation. But man, that's a big chunk of debt to pay off all at the same time. Think about all that interest saved. Man, that's got to feel good. I don't know. I would sleep easier if that type of activity was going on in my household, and it has. I've been there. I've been there, done that. And the best way to pay off debt like that, and I don't want to sound I don't want to come across the wrong way, because for a lot of people that build up that debt, it's really difficult to pay off, especially if you don't have the money coming in to do so. But I'm going to say the obvious. The way to pay it off is the way that Jason paid it off. And if you don't have that type of capital, or if you can't swing an asset deal like he did to help and make that debt payoff a priority, then you're going to have to overpay on those minimum payments. Okay. Second of all, I would have liked to have seen, not specific to Jason, but I think he would agree with me. I don't like to see people with credit cards in every store that they shop in. Take your selection of one card that you're satisfied with. It's got a good bonus program that doesn't charge you an annual expense, and go with that. Cut it for your spouse. That way you guys are spending on the same page. But that really jumped out to me this week as the two shout outs that I wanted to give some opportunity. I just saw DC Channel Investing said, hey, just popped in. So certainly some other channels in here as well. I've dropped the link to Jason's wife's channel just as a shout out. I was subscriber 400. So that's going to be my claim to fame right there. But now anything we can do to help out anyway, it's a lot of fun. It takes some courage to do that, to provide your content on YouTube. So what we can do to get up to the, get up to that first 1,000 mark, that's pretty awesome. But for the rest of the channel creators, I see again DC Channel Investing. I would give you a specific and personal invite to the show tonight. If you want to come on board and help wrap with this fine community, you're welcome to do so. Otherwise, I'll do what I did last Friday. Once I get my engine started, I'm like a diesel engine, because again, this is my favorite topic, and I can't think of any better way. If I knew it, I would do it to get this message to the masses, because that, make no mistake, is the goal, to make sure that you're not just spending your time in a way that just entertains you, and then you walk away and you don't think about the message that we're putting across. I think there's a little bit more. I'm not trying to be a professional outfit here. I'm not trying to dub and snub, and I'm not trying to clickbait folks into my message. As a matter of fact, if you don't want to come to my message, I don't want you here. I really don't, because you'll probably fail anyway. You really will. Now, if you're curious and you're interested, and you're interested in personal empowerment, and you make your way onto the message, and what I'm saying is making a little bit of sense to you, and you've got a little fire in you, which I think everybody's got, but most people are their own worst enemy. Okay. And I'm not a firefighter for everybody. All right. I'm not I'm not looking to stoke your fire if you're not willing to stoke it yourself. All right. We can just provide the fuel. All right. So make your way onto the channel. And if you do want to kick onto the collaboration, if I don't get talking too much, I'll try to throw as many invites in as I can to help give you guys that opportunity. I'm dropping one in now, but feel free to jump in there and help me as you see fit. I see the personal finance channel. I did see JMac Investing also in the group here. Already given the shout out, and Quest to Fire is in the group. I really appreciate you making your way in. I was rapping with Dave with Hidden Freedom Investing as well, who's made his way in on a Friday. Rock on. Financial Foundations is here. GW Life as well, financial investor as well. And I don't think I missed anybody except for Gen X Dividend Investor, who was one of the first ones to pop on here. Said he's relaxing tonight and chilling and waiting for the show. I put on a pretty spirited live stream last Friday. I tell you what, it's ironic the stuff that I tend to remember in my 3 years of doing this channel. And that was a memorable one for me. I hope you felt the same. Like I said, when you've only got a few moments to grab somebody, I take that responsibility very seriously, and you'll get my best effort in that goal. That I promise you. All right. So with that, guys, I'm cruising up to make sure I got all the shout outs. And I believe that I do. If you guys have your questions, man, don't hesitate to throw it into the thread here, as I really want to get this financial discussion within the first 30 minutes. So we're about 15 minutes into the stream. We've done the intro and the channel shout outs. I honestly wanted to touch on a few things, and it had to do with the evolution of the investor. If you're one of those new investors, I always have to spend a few moments making sure that we're not revolving around just a channel creator community. I want to expand the horizon a little bit and making sure that if there's new investors that are making their way into the collaboration or the live stream tonight, that you're getting everything from my perspective that you need to know. Because here's the thing, when you hear about investing, it's scary for a lot of people. All right. But you have to start somewhere. You open up the board game of life and you have to start at the starting line. And a lot of people just don't know how to do that. We've already touched on one of the fitness aspects that I contend that you have to have before looking to pursue an investment profile, and that is to eliminate debt. Now, the one thing that Jason mentioned that I was a little bit surprised with is he made a comment during the video that he was not going to substitute his opportunity to invest to pay down debt. That's awesome. It just goes to show to me that the investing priority is right up there with the debt reduction priority. Okay, so if you're in that camp and you're looking to get started in the investing arena and you don't know where to start and you're still looking for that starting line, you need to really assess your fitness, and your debt and your budget have everything to do with shoring up your fitness. Okay. Dave Ramsey does a great job of talking about living below your means, making sure that you're making those decisions. See, I don't like the word budget. I like the word lifestyle instead. I think a little bit different, because for a lot of people, they hear the word budget and they think about something that they will do for a little bit and then fall off the wagon. Okay. It's the same thing with exercise. I hate that word. I don't use it. It's not in my mentality to think that way. Adopting physical fitness traits that will help you become healthier in your life is what I'm about. I'm not about going on a exercise regimen, okay? But the more you can look at your opportunity with investing, in other words, becoming a participant in the market, which is another word for becoming an investor, the more you can think about investing in a perspective, in this perspective. You don't know what you need to know until you know it. Okay. You need to not succumb to the barriers that are going to come into your head right away. Keep an open mind when you're looking to start. Okay. And a lot of people are going to ask themselves, why start? Why? Why start? Okay. I wrote down a couple things. A mission statement will help you with this. Phenom 1 was one that I suggested and turned back to the audience to think about. Have you answered this for yourself? Why do you invest? I'll bet you Gen X Dividend Investor has a mission statement. I do. I've just never put it to paper until tonight, right? And these are philosophies that I abide by, but they really do resonate when you get them down in paper. All right. So if you're a brand new investor making your way in, start to think about that mission statement. Second of all, you want to make sure that you establish some ground rules. Okay. Now, that's not to make sure that you play by the rules on the playing field. It's to make sure that you don't get in your own way and become your own worst enemy with regard to the program that you're going to deploy. Now, make no mistake, guys, on the channel here, we really try to provide you with a lot of opportunity so you're not having to paint your own masterpiece, full well knowing that you're not an artist. Okay, we provide a lot of different things to where if you just pay attention, it will really help you in establishing some ground rules. Okay, some ground rules that for me probably exist for the next responsible investor and the next and the next and so on. So that'll actually help you when you're looking to ask the question, why start? Or in other words, why invest? Okay. So I'm going to offer my mission statement now. I want to get this out there within the first 30 minutes so you guys kind of understand where I come from. Some of the things you're going to notice about this statement is that it's detailed to the point where it's not vague and it is obtainable. Okay. So specific and obtainable. All right. It's what we call in the military a SMART goal. If you don't know what a SMART goal is, look it up. All right. But here it is. Provide my money the opportunity to grow over time from capital appreciation and dividends. Okay. There's the specifics. All right. I'm looking to grow wealth with market growth and also look to obtain some dividends. Okay. This is just a statement that has nothing to do with the stocks or the ETFs or the index funds, or the mutual funds or the precious metals or any of that I buy. Okay. I continue. This will not happen overnight. So a long-term view will be required to truly build these assets using tax protection, using a Roth IRA, and fee elimination through self-direction. Okay, now that was a mouthful. I said a ton, but it's very, very specific. I'm going to use the Roth IRA. Why? Because I want the tax-protected benefits of my program. Now, so you guys know that the majority of my money is in a tax-protected envelope. Now, some of it is outside of a tax-protected envelope, but most of my strategic goal is aimed at jamming as much money into a tax-protected account of, here's the key, of a self-directed nature. Okay, most people don't know that exists. The self-directed account allows you to enjoy the wealth preservation aspect. Okay, so we've lowered the expense within these Roth IRAs as opposed to what most people do inadvertently, I might add, when they go in and they sit down with a financial planner and they opt you into a managed program. Okay, very, very important. All right, I continue. Assets comprise a 50-50 strategy of passive ETFs and single stock established as proven winners over time. That's my mission statement. Now, for you guys, it doesn't have to read like mine, but I highly encourage you to make a statement, put it on paper. It really does mean something when you put your own words down in paper, and it allows you to hold yourself to the fire a little bit with regard to answering the question or abiding by some level of ground rules. So what I said in this statement was that, look, Ryan, keep your mitts off of your portfolio. Okay. Let it grow over time. Your long-term capital appreciation is not going to be, it's not going to be realized unless you put the best quality assets in your account and allow them to grow over time. Okay. So super, super important on when we're looking at how to start. Okay. Work on your fitness. And then why start? Why is it that you invest? And I have so many people that come to me and they ask me, Ryan, I really want to get started, but I don't know how. And I ask them why. Okay. The why has to come before the how. Very, very important. I can tell you how to invest all day, but if you don't understand or substantiate the why for yourself, you're going to be establishing a program on some pretty shaky ground, and you may have a little bit of problem when things get shaky. Okay, really holding true on the program because you've already pre-established that criteria for yourself. So super, super important. All right. Anyway, I'm going to get to the what to buy and the portfolio review down the line a little bit, but I do want to try to get to some of these folks in the community. Honestly, JL Collins has pointed out here in one of these, throw it up on the screen. Simple Path to Wealth is a life changer. If you Google search, I highly recommend searching that through Google or YouTube. It's a must watch. It'll take you about an hour to watch it. It's incredible. It's one that you'll watch one time and it will stick with you. It's one of those messages that'll really, it's got the potential of really impacting your life. So thank you, Freak. I appreciate that for offering that. So Freedom Finance, I invest in fear. I think most new investors have more fear of the unknown than seasoned investors. I've, for one, do not fear anything anymore with the market. I've been through most everything that an investor could foresee, a couple really severe downturns in the market. But I think you strike at a point, and I really am glad that you mentioned it in the thread, because the more we talk about the internal barriers that I talked about getting over when you're a new investor, I think the better off we'll be. And if we've got new investors in the community that'll make their way in here after the fact or during the live stream and say, man, it's okay to be a little bit resilient or a little bit apprehensive before entering into the market. I remember the first two stocks I bought, I was scared to death a single stock. I really thought that was more of a rich person's game, and really kept myself off of investing. But here he's got a clarify. Here we go. I invest in fear. I'm in when people are scared. Absolutely. I don't know if there's some of that going on right now. I think there's probably more potential for people to be pouring into the market now. I think if you've enjoyed this run over the last 12 or 13 years, congratulations. I don't know if we're going to get another 12 or 13 years out of it, but we will see. Honestly, I don't really run my program that way. I've taken a little bit of trading profit. I've put some cash aside in all the accounts, but I'm still fairly heavily invested. I've moved to a little bit more of a 50-50 mix in my investing strategy, that of which I'll kind of go over when we're looking to answer the question for new investors on what to buy. And this is not going to be specific to an individual. This is really going to speak to the masses on how anybody can look at the stock market and get rid of the deer in the headlights look and be looking at this thing and going, geez, I don't know what to buy. What do I need to do? I need to find the next chemotherapy drug in stage 2 that's meant to cure cancer. Most new investors think that they have to find that needle in a haystack. And I think the needle in a haystack sets you up for a real rude awakening in the market when you're approaching in that way. I think you'll find that if you just look at the 11 sectors as a whole. And I'm going to identify for you what I thought were the top 2 stocks in each of the 11 sectors. If you look at it that way, it's really interesting to kind of part the sea a little bit and think about the stock market in a way of, why are you looking for a needle in a haystack when the best way to invest in the market historically has made a lot of people very, very wealthy is just investing in the very, very best companies out there and living to fight another day. Don't try to outsmart the market. That's what I mean when I say that all the time. And I can't tell you how many people talk to me and they want to get invested in the market. And they think because I'm an investor, I have the answers that nobody else has in the market. And those people can be really some of the most dangerous to new investors. I know it's a lot more intriguing when people come on and they act like they have all the answers in the stock market. But I contend that the best way is probably some of the most obvious ways to pursue value investing in the market. Okay. So I've moved the strategy. I know I've mentioned the 75-25 philosophy. I've really been going through a lot of deliberation. That was a lot of my spirited message last Friday with regard to the strategies of investing. Honestly, and the intent of that is to continue the conversation on really what I feel like are 2 of the most popular, and I won't say that one is better than the other, but 2 of the most popular strategies, if done correctly, passive investing and then dividend growth investing. Those are really 2 of the most popular. And quite frankly, I will contend if you're looking at anything outside of that, you're probably taking on a lot more of a degree of risk. For example, if you're looking to add swing trading as a strategy to your portfolio, which I do personally, if you're looking at some high growth investing strategy in your repertoire, you can do that too. If you're looking at a penny stock, right, the degree of success goes so far down on the scale. If you want to engage in that, the majority of the time you're going to lose. All right. And it starts to remove itself from the category of actually investing and starts to introduce the category of speculation, which I really do feel like there is a gray line there. But honestly, the majority of the techniques that we talk about, I tend to revolve the majority of this conversation around passive investing and dividend growth, value investing at its core, honestly. That's some of the best ways that a new investor can really look at what strategy of an investor you want to be. And I think with the majority of new investors should probably look to lean toward the passive income and get that first base of 10 or 25,000 bucks built up. Set yourself that first financial goal of giving yourself a fighting chance. Okay. I'm now building simultaneously 3 portfolios, urging eking them up to that first 10,000. The aggressive growth portfolio I've shared in the thread here, we're up $1,200 in that. I think we took a little haircut today, but I'm up over $1,000 in about a month and a half in the aggressive growth. I've got the passive S&P 500 and small cap along with SPHD, which is the dividend payer in the YouTube machine. That's where the YouTube earnings go. So we just crossed over the $8,000 mark in that portfolio. So 80% there to the first 10,000 goal. So I'm proving that this is possible with passive investing. Okay. I'm proving that it's possible with single stock. The final account that I have is approaching $3,000. And that I have the specialty ETF portfolio, that of which I've also shared in the thread for you guys. And I also share it in the description of every video that I make. So you guys are welcome to kick over there. Check those links out. I do roll out some updates to those portfolios so you guys can kind of track those as we evolve in the portfolio. But those are aimed at providing a deeper example for new investors. Because I tell you what, when I started, it was like setting sail to the open ocean. I had no idea where we could be, when we could be there, how we could get there. and what we were going to do to stay sane in this environment that I thought I just want to invest because everybody tells me that that's the best thing to do. I really didn't know anything about investing when I started. And I think there's a lot of people out there who feel the exact same way that I did. Okay. It's natural. Get over it. Get over it. Okay. Because you can control the level of your angst by using scale. All right. Using scale. For you guys out there that are making $25,000 a year, a nominal salary, it may be all that you have to start devoting to your own financial future. And that's to parlay that $25 from your paycheck and put it into a good program. Now, up till now, 35 minutes into the stream, I've already walked you through in how to start, right? And why start. Okay. Now we're going to start to get into what to buy. This is really the nuts and bolts of most YouTube channels. Okay. Here's what to buy. Here's what I own. Here's what you should own too. Right. And I think there's a lot to be had if you're willing to consume YouTube, consume a lot of it, get a lot of different perspectives on what to buy. But make sure that at the end of the day, what you decide upon to buy for yourself is because you have determined that it is good for you. Very, very simple. Not what's good for me, not what's good for Matt Money, who I just saw pop into the live stream. Great to see you, my friend. I haven't seen you for a while. Awesome to see you. I know you've been busy with work. I saw a thread come through that you've been super busy, as I have. But it cannot be good for every other YouTube channel creator out there, and you don't have the first foggiest idea as to why you're taking a particular position. Okay, it has to make sense for you. And if you need to take ample time to make sure that it makes sense for you, then take the time. The stock market's been around for decades. It's not going anywhere. All right. It'll be there tomorrow. It'll be there next year. All right. But the important part is that you started along the path of deliberation for yourself and making sure that it makes sense for yourself. I can't tell you how many people will come back to the Independent Investor channel directly and say, Ryan, you said that this, and this is what I should invest in. And I didn't have the foggiest idea why I invested in it, but I did, and it's your fault. It'll happen. It's the risk that I run by putting myself out there on social media. And it's one of those things that I can accept as long as I'm being fair with the subscriber base and the community that make their way in here that I acknowledge may or may not have some investing savvy to rest back on. All right. So super, super important there. Before I get into this, I will take the opportunity to drop another invite into the community here. Otherwise, I am going to run this myself, which is what I did last week. I don't know if you guys are just wanting to sit back and drink your six pack. I know some of the folks. So there it is. It's that now in the thread. You've got your invite, but just keep that in mind, guys, please. I really want to make sure that this 2 hours is not just 2 hours for you to watch, learn, get a little bit excited about, and then walk away from. I really, really want it to be a little bit more special than that. Okay. I really want you to be like, wow, I thought I understood what the investing opportunity involved. And this guy said a few things that really, really got me thinking for my own benefit, man. Once you kind of start that, and once you've realized that I've stoked your fire or threw a little bit of fuel on that little fire, you're probably on a road that you may not have ended up on if you didn't have the opportunity to come on and converse with the Independent Investor channel. I did just see a guest pop on, and we're willing. I'll throw you in the collaboration here for sure. Whenever I have the opportunity to see. I don't see your camera just yet, so you can continue to troubleshoot if you'd like. Once I see that camera pop on there, feel free to pop on. It's no problem at all, man. So anyway, I'd kind of like to get some thoughts a little bit. I know I've thrown out one of the sectors right now that I'm still a little bit surprised on, the energy sector. I really am. It's one of my favorite sectors, and I really think it's probably the most out of favor right now. I don't know if there's a more out of favor sector right now than energy. But if you're that new investor and you've gone through the initial deliberation that I've kind of walked through a little bit, I want you guys to think about this. All right. What to buy. Okay. What type of strategy do you want to deploy? Okay. Usually you've got your ETFs, your index funds, your mutual funds, your groups of stocks that are built together and housed in one particular product that give you that diversification over the broad market, or as a group of individual stocks. You could do that too. All right. That's usually your passive option. Okay. It's sought through your ETFs and your index funds. I just saw a young investor pop in. I'm not sure if you have your camera dialed in just yet, because I don't see it working. And when I see that, I see something moving. I see some lights. I'll let you continue to troubleshoot, and I'll keep one eye on you. But if you get that troubleshot, I'll drop you in the live stream for sure. But so Matt just offered his comments. I do respect Matt's opinion. He's kind of an expert on the topic, so that's why I always selfishly try to take advantage of Matt's insight when he pops on here. I also have Lydia, who's just popped on here as well, who's engaging in a project of her own. That's great. All the best to you. That's really awesome. And my hat's off to you. Honestly, that takes a lot of courage to branch off and do those projects. That's for sure. So Jess J says, I'm consumer staples heavy with some other sectors. You want to try to make sure that you're getting some good exposure to all the sectors. Honestly, everybody's going to have their favorites. But I was looking at the staples earlier, and I probably am a little bit over staples as well. But here's the thing, passive or active, and I consider active investing a little bit more stock centric. When you're looking to answer that question for yourself, what do you want to buy? And for me, again, if there was a page out of my playbook that I could just openly give away, package in a little package, and just give to you as a new investor, it would be the 50-50 split, because it just goes to show how much I put value in the passive category and how much value I put in the single stock category. All right. And I've moved off of my philosophy a little bit of a 75-25 portfolio. I'd really like to seek out a 50-50 mix. It just seems right to me. It really does. With everything that I've got going on in my life, with my employment, with my pension that I may have coming, with my TSP investments, with my Roth IRA holdings, I really want to try to seek out a 50-50 mix in those Roths. Right now, I'm reporting to you guys that Roth number one has about $40,000 in 6 ETFs. I've rolled that out to you guys. There's about 11,000 cash in there. Okay. The remaining 51,000 is in single stock right now. So once that cash is been able to filter into the passive base, I will be at that 50-50 mix with that first $100,000 in Roth IRA number one. So just to give you some idea of how I think about strategizing, if that's a word, I don't know, it just sounds cool. But anyway, how I look at my Roth IRA opportunity there. And I see young investor there in the corner. I just haven't seen a camera pop on there. So I don't know if you're still troubleshooting. I'm not ignoring you at all. I'd love to have you on here, but I want to make sure that there's going to be some level of camera that comes through. I hope it's not on my end. I hope not. If it is, I do apologize, but I don't see the camera coming through there on my stream. So I don't know if it's something that I've done that's screwed everything up, but that's all right. I'll run the stream myself if I have, but try to troubleshoot it on yourself. Honestly, this is like the wild kingdom during the independent live stream. I never know what it's going to get. But that's portfolio number one. 3 strategic goals in that Roth IRA. Number one, diversification. All right. This is something that I talked about last week, that these stock portfolios, I know you want to consider yourself diversified. I know you want to try to convince yourself you're diversified, but you are in fact not diversified. Okay. If you sit here and tell me, Ryan, I've got 20, 30, 40, 50 stocks in my portfolio, that's lovely. You may consider yourself diversified across a single stock perspective. But in my perspective, I'm talking about a good fund that holds 400 or 500. I'm talking about the S&P 500. I'm talking about international diversification, right? So you've got to make sure that you're meeting that diversification. And I do that through that 50% base in my portfolio. Second in my portfolio, dividends is the second goal. So my ETFs are driven toward that dividend perspective. That's why I have the VYM in there, and it's my largest holding by far. Second of which, I have the international dividend holder. So not only am I getting international exposure, but I'm meeting one of my strategic goals of dividends by owning that ETF. I just saw you pop on there, young investor. So whatever you're doing, troubleshooting, keep it up, because I'm going to drop you into the Independent Investor Channel live stream. I got one eye on you, and I'm teaching finances here on the other side of the house. So, but the last one is that global exposure. I think a lot of people are getting caught up. I understand that a lot of these U.S. companies are diversified across the globe. However, it's a little bit short-sighted to consider yourself an investor if you're not looking to seek out some of that international exposure. Some of the names that help me do that is the VYMI, that's the International Dividend Payer, and the Emerging Markets Fund that I hold through Vanguard. So that helps with a little bit of that global diversification. And then finally, a couple of the specialty ETFs with the real estate, VNQ, and then VPU with the utilities, because those are just 2 sectors I'm not quite as confident. I know there's some investors in the group here, especially Gen X dividend investor, and I would probably throw Matt Money in this category as well, who probably has a little bit more comfort in single stock with regard to some of the companies that represent the utilities sector, okay? I'm not one of those. I've got my 2 favorites that I'll disclose here pretty quick when I comb over the 11 sectors, but I would rather just own those 2 specialty ETFs and to cover that exposure in an ETF. That way I own them all, to hell with it. The utilities pays a nice 319 dividend, I believe. So I'm making that 3%. That can compound over time, and I just own the entire sector. Easy. I sleep easy. I'm good, right? So just comes back to the whole what to buy. Well, by nature of me talking through the deliberation that I go through, okay, it can really help you answer the question for yourself. Comes back to my point. Make sure that you're going through the real deliberation. And these are the impasses that I talk about when you're talking about active investing and passive investing, stock investing versus ETFs and index funds, all right? Each investor, to each his own, right? They're going to choose those products that are appropriate for their own profile and their own risk tolerance, okay? So that just helps you with that deliberation, okay? The second portfolio right now is about 30% passive, and I've got the remaining 50%. I've got a pretty good cash holding of about 23,000 in that second Roth IRA, but 30,000 passive. But in the passive aspect, this is my biggest position, which is Vanguard's S&P 500, the VOO. Okay, so about 23,000, relatively speaking, fairly. It's a suitable position. Let me just say that. I'm very aware of the current market condition being at an all-time high. I get it. But at the same time, the underlying economy and the fundamentals are quite good. This is based on some systemic risk and some economic numbers that got released today that were fairly unfavorable. A little bit of stagnation going on. I don't know what the specific cause of that is. I have some ideas, but that is an attempt at getting my wife what I feel is the flagship product out there through the VOO. So we own the S&P 500. That's the largest position. And then the other one in that one is, I believe she's invested in one of the small cap, as I am. I failed to mention. But the small cap market, I believe she's in VBK, I believe, which is growth in hers. Okay. Because one of the strategic goals, again, is diversification. Number one, I do not overlook the importance of diversification in a portfolio. You got to have it. It's a defensive mechanism through a downturn to make sure that you're grabbing all of the depreciation as it goes down. You're catching that bottom safely by not selling, by not panicking. You're making sure that you're enjoying stocks basically getting cheaper. Okay. So when you want to step in at any time, you can very simply look at the market and say, okay, I'm off 10 bits. I'm good to go. Or I'm off 20. This is a little more uncomfortable, but maybe I buy a little bit more now. Or man alive, now we're in a full recession and we're off 30%. We've been in a bear market for, let's say, 6 months. Okay. Right. So it allows that. I always consider the S&P 500 as kind of the barometer of the stock market. So you see how everybody throws out the S&P 500. There's investors out there that don't know what I'm talking about. All right. But when I relate it to something like the barometer, then they can relate to that and say, wow, right on. That's a pretty good stab at it. Now, if the market continues up, then I win from that appreciation. If it goes down, no problem. My investing time horizon is not to hang it up next week. So I'm good to go. And if my plan ends up not being what I had forecasted it to be, then I'll continue it past 59 and a half. Which is my target date for retirement, and it's in line with my Roth IRA maturity as well. Okay, so super important there. The other holding in there is VEA, which is the European Developed Markets. So super important there to again pursue that international exposure. I get that through the ETF product. That's 30% of the portfolio. The remaining also is single stock holdings, that of which I'm going to give to you guys now. So this is going to be like stock picks on steroids within the first hour of the live stream. So for you guys that are 107 viewers, I said at the top of the live stream that we're reaching 300 people with my live stream out of every 100 million in the United States. So I know you can stretch that 300 for every 100 million globally. So therein lies the opportunity with YouTube to meet such a small audience in the world, and hopefully we can continue to grow the channel. That's what resonated with me today from Jerry's video for sure. I will have a big YouTube channel someday. I will have a big YouTube channel someday. That was pretty cool. All the best to Jerry. No doubt about it, man. We're all trying to grow the message for sure. And I have no doubt that we will. I have no doubt. Remember, YouTube is one of those opportunities that you can start with very little downside and unlimited upside potential. With very little overhead to start your own business. And Jerry's cool, man. Jerry speaks from the heart. And that's one reason I kind of come back to his message a little bit, because he just talks like you're sitting on the couch rapping, and that I don't know, that resonates with me personally. I like it. So anyway, strategic goals of the portfolio number 2, when we're looking to answer that question of what to buy. Remember, this is kind of one of those arenas that a lot of new investors, this is where they get sidetracked the easiest. This is where I posed the example. If you took 100 investors and you gave them $1,000 or $10,000 or hell, $100,000, it wouldn't matter the money amount. If you took that and gave that to 100 new investors, you would be amazed at the products that they were able to buy in this account with very little to no guidance. So It's super, super important. But I just saw the young investor pop on here. Awesome. He's got the channel. He's giving me the thumbs up. So he's ready to come on here for sure. I'm going to give the young investor about 15 minutes if I can. Honestly, if there's anybody else in the group here that want to make their way into here as well, I want to give this opportunity. This is an open forum here on the Independent Investor channel. So I don't know if he's got I'm going to give it a try. It looks like there's some technical difficulty, but I'm going to, there we go. I just see him pop on there. You okay? Awesome. Let me the ears here.
Yo, keep
Hey,
investing.
can you hear me okay?
Yo, hold stocks
nice.
forever.
Awesome. Awesome. You got it? Can you hear me okay?
Yeah.
How long have you been investing?
2 years.
2 years?
Yeah.
Awesome. How long have you been following my channel by chance, if you don't mind me asking?
Like 6 months.
Awesome, man. Welcome to the message. That's awesome. So are you hearing some of this stuff that I'm talking about when you first start investing in the market? You know,
Yeah.
Nick, does that make sense? Are you turning other investors on to this message? Because I can't tell you.
They don't get it. Like they don't care about it.
Dude, I can't tell you how many people I talk to out there who they don't even think about wealth building for themselves. You know, it's crazy.
They care about Saturdays only.
Yeah, exactly. What style of investor are you? Can you give the audience a little bit of an idea? Because I think if everybody hears different perspectives, it helps understand, how you're seeking out exposure. If you've been with investing for 2 years, you've been with me for 6 months. So I don't know how much you've reviewed of my content on how I go about investing.
I'm a value investor who looks for good yields, but I don't chase them. And a dividend growth, of course. But mostly value.
Awesome. Can you give some ideas on some of the holdings that you've got? Are you more of a passive investor or single stock investor? How on that?
I'm a single stock investor. My biggest holding is Johnson & Johnson. My biggest holding.
Mine too.
My second one is CRISPR. It's a gene editing.
Interesting. Do you have the ticker symbol for that by chance?
Yeah, CRSP.
Nice. Awesome. Do you by chance run your own YouTube channel?
No.
Nah, why not?
As you can tell, I don't like showing off my face.
We got a few of those in the community right now. I don't even know if they're real human beings or not, man.
Yeah.
But hey, I tell you what.
Thumbs up to the chat.
Amen, man. That's freaking awesome. That's awesome. You've been investing for 2 years?
Yeah.
Do you have what type of account do you use to seek out your exposure? Because that's the section that I'm going to get into next.
I wish I had a Roth account, but I use a cash account.
Use a cash account? Awesome. Yeah. Who's the broker? You using Robinhood or M1 Finance? Using TD?
Yeah.
So that's one of the top 5, man. If there's any of the young investors who are making their way onto the channel, if you can grab a hold of one of these top 5s, you're golden. Now, let me ask you this, if you don't mind me asking, do you invest on your own, and how do you do your own? Do you do your own research, and how do you go about doing that? If you don't mind, help these guys understand.
I watch like a lot of YouTube videos.
Yep.
And I go on like Seeking Alpha and all that stuff.
Nice.
But I don't really listen to the analysts when they say buy or hold or sell. I ignore all that stuff. And you guys should too. If it's a buy rating or a hold rating, it doesn't matter. Honestly.
Yeah. Yeah, I think I just ignored that today. I took a pretty good position actually today in Walgreens. So the community will kind of understand. I took a pretty good position in Walgreens. And what are some of the other positions that if your biggest positions, Johnson & Johnson, do you have plans just to add to that over time? Supplement it, just single stock? Is that what you're rolling with?
Yeah, I only have single stock, but I have 5% gold just as a hedge.
Awesome. Awesome. How did you come to that 5% hedge?
From Ray Dalio, you know him?
Yep. Nice. Yeah. That's awesome. That's really
Because
awesome.
gold went up a lot today as well.
Gold's going up. Yep. Yep. How is it that you hold your exposure? Do you own it in gold stocks in ETF, or do you prefer to own the physical metal itself?
Nah, I use the ticker symbol GLD.
You bet. Yep.
Yeah.
Yep.
Easier.
Hella big takeaway. Yeah, you don't have to safeguard anything, man. You just hit buy and sell. You know,
Yeah.
I don't know if your impression or your goal with that is just to buy and hold it forever and try to keep that exposure level at around 5%. Is that your goal?
I don't sell stocks. I don't sell any stocks.
Elaborate.
I don't know. I just want to hold. I'm young. I got like 40 years ahead of me. I just want to hold forever.
Yeah, but let me tell you, man, I don't mean to patronize, man. I'm 43 years old. A lot of young people don't have that perspective. All right.
Yeah.
So I commend you with that perspective. If we could only take that and duplicate that perspective across a lot of other young folks, there would be some wealth creation like this country and the world has never seen before. It's super, super difficult. It's the hardest, easiest thing to try to teach people what to do. That's legit. World. Well, yeah, but the thing about it is, man, other countries look at it. I don't know where you're from, and you don't have to say. I'm in the United States. I'm on the Eastern Seaboard, and in this society,
I'm in Canada.
You're in Canada, so somewhat similar and a consumer-driven, right? So the temptation there consumes a lot of people. I just talked, one of my boys, J-Mac Investing, right? Top of the live stream, I talked about the ability to pay off some debt, you know, and it's easy to get into that trouble. Hell, I've been there myself, you know, and it's easy to kind of let that spiral out. So I don't know.
First pay off your debt, then invest. Of course.
Yeah, it comes back to that fitness that I was talking about at the top of the stream. I think it's hard, man, because a lot of people don't have ample inflow of money to just pay it off quick like he did. That was pretty legit. Yeah. But man, if you can do both and be responsible about it, I really think that paying off debt and investing, get them as high as you can on the priority list, and you'll be good to go. I've been there too. And I never saw it as a, I've got to eliminate debt before I invest. Now, right now, I don't have any debt, but I sure as hell has had some in my past, and I've done everything I can do to get rid of it, man. That's true talk, man. I really appreciate your wisdom. That's awesome. That's really crazy. Freaking right. I've got a ton of people from Canada. That's like my second most popular audience that come on, and they look to take part in the independent investor message. So I'm
not trying to work these types of jobs for the rest of my life. Honestly,
I don't know, man. That can be part of a freaking goal right there, as far as I'm concerned. You know, like why invest? Why are you doing it to play games? You know,
no.
I mean, it's serious business, man. It's not a joke, man. You do it for those reasons because you're like, you know, I don't want to trade my time my whole life,
for sure.
You know. Now, freaking, I got to be honest with you, man. I've come on here and been pretty honest with the community and tell people how much time I've traded for my income, and I would love at some point to be able to step away from that. I really would. And the quicker people can figure that out in their lives, the better off. And maybe I'm still trying to figure it out myself.
You'll be more happy.
I don't know, man. It just like, I don't know. Freedom makes people happy. If it's relative, there's a lot of things that can make people happy in life. But I tell you what, man, that freedom, how else are you going to get freedom? If you're owned by a job, like straight up, I'm owned right now. Now I like my job, but the sheer reality is I run the risk of beating my head against a ceiling with the income. Okay. Whereas if you invest early enough in life and build a nice portfolio, I'd like to understand a little bit more about how you've built your portfolio out, because you are young. And if you've got the maturity to hold a single stock basket like that over the long term, you've probably set yourself up with the greatest wealth creating vehicle that's known, you know, because a lot of people can't just become real estate tycoons when they're young. It doesn't work that way, you know? So pretty real talk, man. That's awesome.
I'm trying to live to 100.
I love it. I love it, man. I've said the same thing myself a few times, but I'll tell you what, I've tested fate a few times, no doubt about it. Commercial fishing in Alaska, yeah, I've been up against it a few times. Sometimes I'm just thankful to be here right now. And I don't know. Life is good. Life is good every second that you live it, man, for sure. But is there any other messages that you'd like to address the crew? You're welcome to do so if you'd like. I think I got you still on audio. If you do. No, it's all good. No, I just saw you pop off for just a sec, man. It's no worries.
Wait, what's your largest holding? I forgot.
My largest holding right now, single stock, is Johnson & Johnson, Microsoft, and the next one in line is probably, I'd have to look at the portfolio. Let me see. McDonald's is a fairly large holding for me. ExxonMobil's a fairly large holding for me, which is pretty out of favor. Disney is a pretty large holding.
Exxon is a buy.
Exxon's a buy. Absolutely, I agree.
Yeah.
I just had one of my guys pop in here who knows oil like the back of his hand. So I'd like to get his perspective. I haven't talked to him for a couple of weeks, but yeah, I think Exxon and Chevron, some of the majors, are buys right now. I think Exxon right now has come down to about 17 times, which on the paper isn't really that inexpensive. But man, I don't know. This is a little bit extended with regard to this energy. They're the most out of favor sector right now.
It's gonna turn around.
When do you think, and why?
I don't know, man. I just have a feeling it will. I don't have any facts, but I just think it will. It's too big, you know?
It's too big, and they're making incredible investments into certain properties. I think it's over in Africa somewhere where they've just picked up an incredible piece of property. But you're right. I think if there's something that can be done.
Warren Buffett believes in it.
Yeah, absolutely. As do I. I've been an investor in ExxonMobil, and I'm in deep water with Exxon right now. I mean, I'm down 30% right now in my position, just because I bought it at the wrong time. But I'm still holding. I've been paying dividends this entire time. So I do.
Nice.
Go ahead.
The dividends. I own the Oxy stock. You know that one?
Which one?
Oxy.
Absolutely.
Yeah.
Awesome oil company. Awesome. Yeah.
It has such a large dividend as well.
Yeah. I think Marathon Petroleum is another good one right here at 59. Marathon Petroleum is another good one. They're going to benefit from distillate fuels for international shipping. They're going to be huge because the rules are changing with regard to how clean a fuel you can burn on the ocean. Yeah. It's already changed this year.
That's good.
So Marathon's the way to go, man, for the direction that the environmental considerations going. I think some of these energy companies are actually going to be at the forefront to helping, to be honest with you. So
they got the money.
I don't know. It's one of my favorite sectors, man, but it's hard to say that now because it just hasn't made any money. If you've been an investor in energy over the last 3 years, you haven't made a dime. It's been tough.
I just got into it.
Did you?
Yeah.
Probably smart. Have you controlled a little bit of the allocation? You don't have a lot of your portfolio in energy, do you? It's pretty relative. Yeah. It's a volatile sector. It's tough. Hell yeah. Absolutely. Good stuff, man. Well, that's awesome. I've got Jan. I see Jan pop down in. There's another person who wants to pop into the live stream here. You're welcome to stay and wrap as well, but I haven't seen a camera pop through. So if you're still troubleshooting as well, you can absolutely make that happen. And I'll make this, I'll get you into this either with myself and young investor, no cam. It's awesome, man. I wouldn't ask for your name either, man. I'm just going to call you young investor too. If you want to protect your anonymity, you got it.
Good name.
Absolutely, man. You got it. It's no worries. If you were running a channel, I'd give you the appropriate shout out, but I won't do that since you're trying to protect.
I got no channel.
I just appreciate you coming on and offering your comments, man. It's pretty legit. It sounds like you're on, like, how the heck did, because you had to have learned this stuff from somewhere. So can you help?
I learned it from my friends, because my friends are like scalpers. They're traders.
Yep.
And they're not making no money from that. So
so you paid attention to what not to do, and you just do the freaking opposite? Yeah. Wow. That's awesome, man.
It's worked out.
It does.
Passive income.
Yeah, it's passive income, and it's like, I don't know, man. Again, when I talked about the difference between investing and speculation, I think everybody wants to quickly throw everybody in the same category, and investing, in my mind, is a lot different, man. It's a lot different. Like you said, man, you never sell.
Yeah, never.
When can you justify selling Johnson & Johnson? Why? Doesn't make any.
No need.
There isn't. Not over the long term, man. J&J's been paying a dividend for over 100 years. So I don't know how old you are right now, but I guarantee you're older than one. So Johnson & Johnson's probably going to outlive you. No offense, but
that's good.
I think you'd like to be there to enjoy the ride a little bit. I think that's pretty awesome. So what are some of the other holdings that you've got going on? Some oil exposure, J&J, that.
I have Colgate. Do you know that one?
Absolutely. That's a Gen X dividend investor favorite. He's in the group here for sure.
Yeah.
Yep.
Yeah.
Did you opt for Colgate over PG?
No, PG is amazing, but I just don't own it.
What's that?
It's too. I think Procter and Gamble is like kind of overvalued.
It is. Yep. Yeah. I mean, you could opt for the next best one. Kimberly-Clark is another one to be put into that discussion.
Oh, yeah.
But Colgate-Palmolive is really good. Colgate's a little overvalued as well. Kimberly-Clark has come back a little bit. Did you? Awesome.
At a good price, yeah.
Awesome, man. That's a buy and hold forever. It's pretty simple.
Yeah.
You know, what are some of the other holdings that you have?
I own a senior homes.
Nice.
Ventus.
Real estate. Ventus. Yep. I don't personally, but there's a ton of people in here that will appreciate that. And if you got the Tinger, awesome. VTR. Awesome. Thank you. That's really cool. So you like the REIT?
6% yesterday.
Nice.
It beat earnings.
Nice. Yeah. That's awesome. I eat up stock success, man. I really do. I come on here and I talk all the time, most of the time to an empty mic, out to an audience of whoever's going to listen. But I really, really do open the door to have people come on and say, man, I'm here's how I seek out my success, and I've succeeded. That's why when you tell me I've got a 6%, I'm all about that, man. I'm the first one to congratulate people and say, hey, good job, man. Don't be surprised by success in the stock market, man. You know, because I think you'll contend. I don't know, man. I used to play cards. See, I don't know. Not like you. I didn't trip and fall into a perfect investing habit. I made every mistake in the book before I got to it, you know, and
I learned a lot, though.
You do. You really do, man. You evolve over time, and you learn what not to do. For you, I don't know. That's pretty awesome that you paid attention to what your friends were doing and kind of was like, you know what? Okay. I mean, hell, you want them to succeed, but it's amazing to me how many times the people that you know, the acquaintances, they'll just continue to beat their head against the wall and continue along a path that's not rendering results. And you just want to like grab them by the back of their neck and be like, dude, this is not working for you. Like, wake up. And
I think they want like fast results or something like that.
Everybody wants fast results. So what are you going to do? If
it's not realistic.
if there was an easy way for everybody, then everybody would walk that easy way. The issue is this, man. For all the people that try to walk those easy ways, you'll never hear a word from them over YouTube. Never. They'll be the first to come on and say, hey, jump on this fad, jump on this fad, jump on this fad. And when they lose, silence on the line. You'll never hear from them, you know? And it's like, dude, if you're going to make a mistake, man, come on to YouTube and own it a little bit. It's all right, you know? But the problem I have is when people have the inability to keep on evolving. That's the key. Yeah. And it's surprising to me, man. It's just refreshing to talk to somebody who's got it really right. So good on you.
Thank you.
I don't mean to come across as condescending, man, but I am 43 years old. I've been investing for quite a while, but it's encouraging to me. Yeah, that's ridiculous. That's ridiculous. And for me, I'm a little bit selfish in that this means a lot to me. You being 21 years old and come onto my channel and share your story. So I want to thank you, honestly, because we're speaking from a couple different generations, man. There is a generational gap between us. You know what I'm saying? But here's the cool thing about it. The investing threads, I think, they transcend, man. It doesn't really matter if you were an investor in the 50s, 60s, 70s, 80s, 90s, into 2000. And now here we are, 2020, new investors that can tune into this message and say, okay, I heard this guy say he's 21 years old, and they can go back, because I would. Dude, if I was 21 years old and I was catching this message for the first time, I'd be like, what did that guy just say? I'm going to rewind it and see what he said about, well, my friends are doing the same freaking thing. Hold on a second. My friends think that they want to be driving a Ferrari in 2021. And they're looking for the fastest way to get there. All right. And honestly, man, and I know a couple that have done it. A couple. That's it. I know one that's done quite well over YouTube, but it didn't come easy. That's the difference. So when I say pursuing those types of opportunities, you honestly have to be willing to put in the work. You got to be put in the work, because this individual, these few individuals that I know that have done quite well over YouTube, I'm not one of them. They've put in the freaking work. No doubt about it. The irony in the whole thing is he doesn't own a Ferrari, you know, but he's done quite well. And I think those success stories are good. I really do. I think it's awesome. But I don't know, man, 21 years old. I can't freaking believe it, man. I wish I had that kind of maturity when I was 21. That was a compliment.
40 years ahead of me.
You ever done the compounding calculator to see where you're going to be?
I love those.
Yeah. I call that motivation. Is what that is, because the math doesn't lie. And the irony in the whole thing is, okay, the market's going to turn back about 8 to 10%, right? If you have the ability, which I can kind of tell that you do, if you have the risk tolerance to just hold true and fund when they're down over the rest of your life, you're golden. You're golden. Yeah. Don't fall on tilt, you know, don't let anybody steer you wrong, me included. You know, I'll just be your staunchest advocate at 21 years old. Here's why. It's because the people that I talk to at my age, I can't necessarily get through to everybody that's younger. But bringing you on as a collaboration and you saying, hey, I'm 21, and you don't have to do that, but you did it. Yeah. People hear that, man, when they're your age and they're like, what in the hell? I can do that too. That's legit. It's legit, man. It goes back to my point sometimes. I can come on here and I offer the live stream every single Friday for 2 hours. And I talk till I'm blue in my face. People know in this community that they get my best effort every single Friday. And it's honestly for situations like this that I do that, because I don't know who the hell's going to pop on the live stream. And I don't know, you know, who out there we have the potential to reach and help. And that's key. Not only that, it's freaking rare in this world anymore, man. it's irritating. It's almost like the system wants to kind of put its thumb on people. And if people can just understand their independent worth, it's going to go so much further into the future. And it sounds like you've done that. So congratulations to you, man. Pretty awesome.
I know a lot of people who live in the now and who don't even care about the future. It's crazy. That's our generation now, though. They're just wasting time on Instagram.
Are you talking about your younger generation?
Yeah.
See, I wouldn't have coming from you, it resonates, man. Yeah. So I'm a pretty observant person and I know what I see. I'm typically, if I were to make a comment like that, it would turn a lot of people off. But coming from you, because you're part of the generation, you've got a little bit more latitude to do that. You do. And good on you, man, for using the platform to say what you got to say. I like it.
Why not?
I like it. That's what freaking YouTube is all about, man. Not only connecting people, but letting people know, man, they got to figure it out, because the quicker you can figure it out, the better off you're going to be. I think there's a lot of 20, 18, 19, 21-year-old kids. And I no offense, man, you kids, I'd kill to be 21 again. Wasting time.
Yeah.
Wasting time. If you're going to be here 100 years, I'm all about it for you. I'll support you 100%. But don't waste time, man. Get on it now. Get on it now. And I'm talking about getting on the stuff that matters, okay? I'm not talking about, pursuing every pipe dream that comes along, I'm saying, what in the hell has worked for people over time? What has worked for people? Good quality, right? You've obviously got quality. Set those dividends up to be paid over the course of your life. Fund it when you can.
Reinvest those dividends.
100%, right? Does anybody listen to you when you teach them?
No. No.
What gives, man? What gives? They really want to be wealthy. You get to talk to people on the other end. I got people in my community here that are sitting on, at least 7 figures. And I don't say that they're a better or more superior person. I'm just saying that they've rendered a result, right, to provide them a 7-figure portfolio. Multiple people in this group. There could be a number of different people in my community that have rendered those same results, doing what it is that we're talking about right now. So is it just that you're so sidetracked that you can't focus on stuff like that? What is it? I know when I was 21 years old, man, I had a bunch of stuff going on, and maybe I didn't have the aptitude to think about this stuff either, but I did. It's made all the difference now, I mean, I'm knocking on the door to $500,000. So, all I got to do is continue to march toward my goal that I set when I was your age, and sure as heck wasn't owning Johnson & Johnson at 21 years old. Yeah. I can tell you that. I wasn't.
My favorite stock.
It's one of the best companies out there, man. You don't own any technology, do you?
No, I missed the Tesla train. I didn't care about that. I missed it. Whatever. I wasn't even focused on that.
I'm up 127% right now, and I own 0.75 shares of the stock. So I'm up pretty good. I don't even own 1 share of it. I threw it in my aggressive growth portfolio, and it's up 127%. Now it's tough because I can't really sell the stock because I'm going to get whacked with short-term, I got to abide by your rule, never sell, So
I believe in Tesla, but it just doesn't follow like my value because I go for value stuff. Totally.
Well, what do you think about something a little bit closer to home, like an Uber? What do you think about Uber?
I feel like it'll do good, but probably not soon.
Yeah. How about
it? Buy right now?
Yeah, I picked it up at 26. Yeah, I picked it up at 26. It was really out of favor when I bought it. Now there's some pretty good buying going on. What about industrials as a whole? I mean, are you more of
I own 3M. It's a good deal, good value right now.
Awesome, man.
3M is good.
Yep, 3M's an awesome buy right now for sure. That's really legit. So Gen X threw something in here. I'll show you. Hard to go wrong long term with Mr. Softy. Rock on. Yeah,
Gen
I don't
X.
know. They're a dividend. They're a dividend. They're a little bit of a value. They're interesting from a value perspective because they both run up really well. Apple and Microsoft too. So I do see you there, Jan. If you're willing to pop on here, I just got to see that your camera works. That's all before you pop on the live stream. Otherwise, I'm going to sit here and rap with the young investor all night. So I don't know if you're still troubleshooting there. I don't mind kicking you in here, but I don't see
Let's
that
see if the audio
camera's
works.
doesn't look like it. I'll kick them into the stream here pretty quick. I don't know if they're sitting at their camera or what the deal is, man.
I turned off my light and my
Rock on.
Yeah.
Hey, you got me okay?
What's up?
Hey, I got you live, and you're on the investor channel live stream right now.
Yes, John. Yes. Hello. I
Hey,
turned off
Jan.
my camera. Sorry.
That's okay. It's okay. Where are you coming from, man?
Well, I'm from California, but I'm currently here in Japan, military like you.
Ah, fantastic, man. Thanks for your service. I've got 3 of you on the live stream right now, man. So thank you very much for coming on and supporting. I've got Young Investor on the collaboration with me tonight. Pretty awesome. Pretty awesome.
What's
So,
up, man?
yeah, hey, can you talk to the community a little bit? Tell me a little bit about your investing profile, your style, what you look to get out of investing, why you invest a little bit, if you don't mind. I've just got you on audio, but I don't mind keeping you on audio for the group here.
Well, sort of, I'm a value investor and also looking for speculative stocks. So let's say like 20 years from now, I'm thinking about what's going to be happening 20 years from now.
What type of speculation are you talking about?
I would say Tesla, Biomed,
Sure.
AXON,
Sure.
body
Sure.
camera.
Say, there's a lot of different ways to win in the market if you're willing to do the homework, right? Because those speculation trades, those are going to require a lot of homework. And even if you do put in the work, your success rate is fairly low with those speculation trades. You know that, right? So just
Yes.
make sure that you're keeping a good collar on it and making sure that you're keeping it within check. Because the last thing I want to see is one of those speculation trades hit and you thinking that you can duplicate it over and over and over and over again. Just be careful with that. Because I'm talking to the young investor's 21. I got him here. He says, buy quality, buy value, and never sell. If you don't mind. I don't mean to put words in your mouth, young investor.
No, I agree.
Oh, we're still young, man. We need to be aggressive. We get old, it has time.
What's wrong with Amazon?
I think it's overvalued.
It is overvalued. Exactly.
It is.
So you got a 21-year-old basically saying, hey, this is overvalued. And, Google and Facebook, I would throw in there as well. If you're looking at growth companies, Adobe Systems, some of the new growth companies like PayPal out there, there's some good growth opportunities.
Visa's good.
Visa's incredible. Visa's incredible. So you can pick up growth without surrendering quality. And I think that's $1 million question, I think, for some of our youth who want a little bit more action. I think sometimes value investing gets the wrong or a bad rap of being boring. And that's really unfortunate, I think, because I think you can get that really good growth profile and not substitute it with the quality. But it's awesome. What are some of the holdings that you have? Do you prefer single stock or do you prefer ETF, index fund investing, that type of thing?
Me, I'm like half.
Okay.
I try to put more in Dow Jones and SPI.
Gotcha.
And I'm like almost 90% for Visa.
Ah, nice.
What's your largest holding?
Say again?
What's your largest holding?
I got more SPY in Dow Jones.
Oh, that's good.
That's awesome. And you said you're in the military, right?
Yep.
Do you do the TSP?
Yeah, I'm CFUN right now.
What's that?
Yes, I'm a C fan right now.
Oh, awesome. Yeah, that's really good. I spoke with a lieutenant commander I know at work 3 weeks ago, and he said he's all C fund. That's all he invests in.
Yeah,
I
I put some a little bit on life cycle, just in case. You never know.
yeah, exactly. Get that professional management a little bit for a small amount of your money. That's awesome. How if you don't mind me asking, how old are you?
I'm 30.
You're 30, so you're super young too. That's pretty awesome. So I have three different generations on my collaboration tonight. That's legit. I have somebody in their 20s, young, I might add, and somebody in their 30s, and then you got me. I'm holding it down for the 40s, man. So that's pretty
You're still
awesome.
young.
Yeah, hey, I feel good, man, for sure. I don't know. When I was young, I was putting fate to the fire all the time, man, for sure. But you live and learn, I think. So,
Yeah.
but that's really cool. That's really cool, man. 30 years old, man, the sky's the limit for you, just like young investor. That's pretty legit. I don't know. So how long have you been following the channel, if you don't mind me asking, Jan? Is that how you say your name?
Yeah. Yeah.
Cool.
I think I've been following you since since you were in I think it was New York. I think before you move out or something.
Nice, man. Nice. The roots, the younger years.
Yo, do you guys own any Disney stock?
Big.
Disney?
Yeah, it's a big position for me.
I own some, but I'm willing to go down.
It's come down off its highs ever since they rolled out their subscriber. It was up in the mid or upper 150s. So it's come off of that level pretty good, to be honest with you.
I feel like 2020 is going to be a good year for Disney.
Yep, I agree. Yeah, Disney's one of those I love to own, but man, you never want to love a stock so much that doesn't give back to you. Disney really hasn't performed that well, and I've owned it for over 5 years. It hasn't met the market, that's for sure, but it's one of those single stocks that it's easy to be a participant in Disney, to be honest with you. It's one of those. I'm going to go over my list after I get done rapping with you fine folks and go over my two for each sector. I think the community is going to really benefit from that. It's awesome. So, man, I got a ton of people in this live stream. This is awesome, guys. I really appreciate it, young investor and Jan. Thank you so much for tuning in. This is your time, no doubt. I do this for you guys. I don't do it for me. So I'm not really trying to be no social media star. So, but I do it for you guys. That's awesome. But yeah. And anything else, young investor, you got for the group? It's pretty legit. I don't know, man. If you can't get through to your friends that you're talking to, once you bring them on the channel, I'll do what I can do to motivate.
I'll show them this live stream.
Do it.
Yeah.
Do it. Show them. Because here's the thing. I don't really care where you come from in the world. I don't. There's a lot of people who they hit me up all the time from worldwide, mostly because Canada and US, we do have opportunity. Okay, let's be real. But there's other. What's that?
We're number one.
You know, but there's people around the world. They hit me up and they're like, we can't invest like you guys. You know, we can't. Man, I would kill to be able to invest like you guys. So for people who have the opportunity and don't do it, I call that irresponsible. That's what I call it. I really do. And we can't get to everybody, but for the people that we can get to, I'm all about putting out a sincere message to try to get to as many people as we can, because here's what's going to happen. If you hear the message correctly, you really do have the ability to empower yourself. You won't have to tune in anymore to the Independent Investor channel or anything else. But that's the thing, is I put this opportunity out there for anybody. And if you get a hold of it and you hear it, it's freaking powerful. It really is. And it's not magic. You're talking about owning Johnson & Johnson and Disney and some of these good quality blue chip companies that have been around forever. I don't understand what's so difficult about that. I really don't. But maybe it's boring. I don't know what the barrier is. Go ahead, Jan.
I think my my same age with young investor and me are willing to invest. I think they're just scared. Go in, go up. I think how do you
They're
say it?
not educated. They're
Just
ignorant.
I think we just have extreme there. It's not really scary, and I think they're just scared about it. And if they make do useful aids, something like that, make them understand how it works, like projected file, like 5 years from now, I think they will be willing to invest.
Yeah, but the environment has only become conducive to educating yourself. I asked young investor, the first thing I asked him was, how do you know all this? And he said, I watch YouTube. That was the first thing he said. I didn't have YouTube. Growing up, man, I read the paper, y'all. I read the paper. I looked at the stock ticker symbols in the paper from week to week. I didn't get real-time stock and be able to invest with the power of my phone, you know? So I just think where young investors go wrong is they consider this stuff commonplace. And you've got guys like me telling you that it is not. You've got all the opportunity right there to kind of learn yourself up. But I do think you're right, Jan. I think you're right. I think there's some fear. I do. But you can control fear by using some scale and getting your feet wet. You don't have to take everything you have and dump it on the market. That's not what the market is there for. It's not. The market's there for you to be a participant. And if you're not a participant, you're a non-participant.
True.
You're gonna lose.
But no, like Ryan, I tell my friend like what is stock market. I'm giving them like a brief idea. I know some friends like recruit them to invest like 5 to 10 of them. Just telling them how it works, blah blah blah. Dollar cost average.
Just make sure. And I don't mean to condescend to anybody who comes onto my channel, but here's my small piece of just what I've learned over the last 25 years in market. Make sure that if you're saying that you're getting people excited about the market, that they're excited for themselves and not because you've told them or that you've shown them my live stream and it's really, really motivating, whatever. Make sure that they understand why the heck they're doing it. Just make sure that they understand why, man. It's so important. Because if they don't, I mean, it's been easy. Young investor, you said you've been investing for 2 years.
Yeah.
What have you ever been through a bear market? Ever been through a recession?
A correction. That's it.
Sure, absolutely. You went through the big correction last December, right? So you can't trade that level of experience. Once you get that under your belt, you want to save that, man, because it's legit. It'll stay with you forever. Understanding how you're going to react when your money goes down, when it fluctuates, what you should do to take advantage of those opportunities. That's all stuff that's really hard to teach a new investor. And if you say, hey, the stock market's the greatest place ever, and you start recruiting everybody, the level of success that I'm going to judge that by is the number of people that you've turned onto the market that stick and stay in the market. That's the key. Super important. Guys, I really appreciate the live stream tonight, man. Again, thank you for your time. Freaking awesome, man. It's legit.
Thanks for your time. Thank you.
Absolutely. Good stuff. I'm going to still go about 2 hours. You guys are welcome to stay on here with me for a couple more minutes. I'll close it down at about 2. I typically like to keep it under 2 hours for the folks that play it back. Some people play it back as a podcast to pick up on the discussion. But just stick around with me, guys, and help me finish out the live stream strong because it's been super, super good. When the market is in a correction, don't run from the fire, run to it. I think that's super wise. What's that?
Be greedy.
be greedy. Exactly. Yep. That's totally true, man. It's really good. I'm going to throw some of these comments up here. I used it myself when I was young. My little town I'm from is still way behind the times. Investing is a discipline, really. Hey, Jan, do you have anything else to kind of offer to the group? What type of an account do you use to do your investing? Do you use a taxable or do you use a Roth? Are you eligible for a Roth?
I use TSP and Roth Arena TD, Ameritrade, and Robinhood. I use Robinhood just for fun and really have fun. Not really. That's not my main focus, but I'm more focused on
I
CDM trade.
I see. Do you like Robinhood?
Yes, it's very good.
Awesome. Awesome.
Just think about you can buy right away in your phone, like if you're in your restroom.
That's another thing, just to kind of come back to what we were talking about with trying to get new investors on board with this program, is look at the barriers to entry, how they've went down. You can buy Johnson & Johnson now free of charge, free. It'll cost you nothing. I think you had mentioned that you're with TD, I believe. Is that right, young investor?
Yeah.
See, they're one of the top tier brokers as far as I'm concerned. And the opportunity to start an account, how much did it cost you to start that account? Zero.
I paid $10 commission.
You pay $10 up there in Canada?
Yeah. For commission.
Gotcha. So no wonder you buy and keep forever.
Yeah. That's true.
That's what I used to do. You know what's going on down here with free trades?
Yeah, Robinhood.
Nah, major brokers have it now.
Oh.
Major brokers. Yep, Fidelity's rolling out fractional shares, just like M1 Finance. My broker has unlimited free trades with Merrill, with Bank of America. Charles Schwab, which is probably number one on my list. So these are just things, man. I mean, I don't know. You could really cut to the
in Canada.
No Robinhood in Canada.
Yeah.
Yeah, it's interesting, man. I got guys hit me up all the time, and they're like, "Man, you guys got some good opportunity." So there's no M1 Finance there either, right?
No.
Wow, that's crazy. That's really interesting, man. I don't know. I've got to remember when I come onto YouTube that it's a global perspective too. So I appreciate you coming on and offering it. It's awesome. Really cool. Anyway, so Jan, what else do you got going on, man? When do you come home?
Probably next year. Who knows?
You've been over there a while, so it's a longer deployment then?
You can say that.
Yeah. Hey, good luck to you. All right. We're with you. And thanks for your service, man. It's pretty legit. Yep. You know, I got a special place in my heart for you, for sure. Yep. I'm one of them. I'm with you. I don't do this for my day job. This is just my night job.
A hobby.
It's like 1 p.m. right now.
Nice. It's really cool. Hey, listen, guys, I think I'm going to spend the next 10 minutes or so closing out the live stream. If you don't mind, I'll kick you guys off here and thank you before I do so. It's been legit. Really, really special for me to have somebody from Canada, 21, young investor. Thank you very much, man. You're part of the community forever. Really appreciate you coming on, man. Legit. Thank you, man. Keep on, man. All right. Hey, Jan.
Yes.
Yeah. Hey, thanks so much for coming on, man. It's pretty awesome. I'm going to cruise through some of these comments and see if I can't respond to some of them if I can, and then close this live stream out. But thank you very much for coming on. Hope you remember it. Hope you remember it. Now you're really a member of the community. But thanks for all your long-standing support. That's pretty cool because we started in New York, and we're still keeping this project going strong. And I guarantee we'll carry it on from where I'm at now, for the sheer opportunity of reaching as many people as we can. So thank you very much.
Thank you too.
All right, my man. Take it easy and be safe over there. All right.
All right.
All right, man. Later. Well, certainly allowed me to get on a tangent with my generational observation there during this live stream. Never know what you're going to get on the Independent Investor Channel live stream. And that was pretty awesome. That was pretty special to me. Honestly, I sometimes deliver this message and wonder how many of the young folks were actually getting to, because there was some really interesting discussion there with regard to probably a lot of how I was when I was younger, not wanting to pay attention to this too much. And I was always interested in personal finance and stock and all that. So it really does resonate with me to understanding the psychology of how we can get to young investors. I'm not really sure if I or this community has quite figured that out yet. All we can do is continue to build upon the core. That's all we can do. Continue to build upon the core. So when we have guests from all over the world and they're seeking out this opportunity and they want to share their story, or perhaps they're just starting their investment journey, I think people who are maybe just starting on their own journey can really relate with that. I think that's a special thing. Yeah, this one's going to stick with me for a while. I'm very humbled again at the opportunity to come on and offer this, but yeah, this was special to me tonight for sure. This one's I'll have to calm down on this one for a while. I usually do have to, because 2 hours, it's just the quickest 2 hours of my week. It really is. And I do apologize. I didn't get to a lot of the questions tonight. I do apologize for that, but I really, really wanted to engage with young investor who came onto the channel. It's pretty awesome. And also Jan, who came on, who's deployed. How special is that? And it was kind of cool how I was able to get them on the screen at the same time and rap with. We had 3 generations represented on this collaboration, and I think that's pretty special. So just keep talking about, I got GW here, just keep talking about it is the best way. It will compound. I meant what I said at the top of the stream for Jerry and GW. Honestly, one of those channel creators doing a great job. Christian says it was a good live stream. I thought it was too, man. It was fun. I typically do like the break, guys. Okay, so for you diehards that are still in here supporting, I'm going to offer this opportunity open forum every Friday at 9 o'clock. Okay, very simple. Prior to 9 o'clock, I'm usually available from 8 o'clock on doing research, whatever. If you would choose not to come on the live stream, like my previous 2 guests, you're welcome to come on and rap with me without the camera running. Okay, basically the camera will run, but it won't be recorded until 9 o'clock. That's an olive branch for anybody who wants to come on and maybe just has a specific question for me. That's opportunity number 1. Number 2, I really do enjoy the opportunity. I was not expecting to have a couple of subscribers pop on. I know it's an awesome opportunity for the channel creators as well, who run their own channels respectively. There's a few more that I'm trying to nail down to come on to the live stream, and I hope we do that in time. But man alive, what an awesome freaking opportunity. I almost feel like, and the payment for me on this channel is a byproduct of why I do this. And I'm not talking about the money. I'm really not. I'm really talking about the ability to talk about my favorite subject for an intense 2 hours without the understanding of who and how that's going to affect people. I just think that's lovely. I really do. I really do. And it's part of the fuel that fires up my passion for this particular topic, because it goes beyond the dollars and cents, man. It goes beyond the dollars and cents for people. It really does. What I said about some of the larger portfolios in the group here, I don't judge you on that. I don't. All I do is acknowledge that that's a heck of a victory if you're working with those portfolios. If we can unwrap that a little bit and understand how you got there and what that can mean for some of these new investors, to trim away some of the fat, okay? Help these folks understand and define that road a little bit easier for these new investors. But I'm really open to ideas. I really am. And I think Jerry said it right. I think it's super, super important to continue to build this foundation. I look at this opportunity, the live stream being a product of the Independent Investor channel. I look at this in the same way I approach investing. Okay. We're going to build it over time. We're going to build it. Okay. And we're going to build it with integrity, and we're going to build it based on the opportunity that comes through folks that make their way into this and they think about it outside of the 2 hours that we offer the product through YouTube. I think that's awesome. A question popped in here from Justin. I'll throw it on here. Ryan, forgive me. This is a dumb question. I can't believe I've heard that before. But does compounding interest automatically occur when you buy, say, VTI and hold long term, or do you have to turn on dividend reinvestment to get the biggest gains? So certainly the dividend reinvestment certainly does help. The idea behind the compounding interest is based on a phenomenon, not necessarily what happens in reality. Okay. Anytime you run through a compounding calculator, you have to kind of understand that that's made up in a vacuum, in that it assumes a rate of return of 7 to 10% per year, whatever you put in there. So really the compounding effect comes from the year over year building of that average of 7 to 10%. Now we know that the market returns have been historically around 10% on an average, okay? But it's not a guarantee, and the market will go through years where it'll lose money, okay? It'll go through years where it will have phenomenally more than the 10% average. And that's really where the mathematics grow upon. I just think the dividend is basically like a kicker, okay? Think about the dividend as a kicker. The dividends reinvested over time is going to increase the amount of the compounding effect from quarter to quarter to quarter. That cumulative growth over time is always building upon a greater amount of shares in a particular stock. So it just helps to infuse that compounding growth over time. So bottom line, you always want to reinvest your dividends, but that's a heck of a question. It really is. It wasn't a dumb question at all. It was a really, really smart question. But I think the real takeaway is understand that compounding calculators are there to help get you motivated about investing. If in a vacuum you were able to just get paid, 10% per year, 10 divided by 12 will give you your monthly returns, and the market just nice and easily went up. It doesn't happen that way in real life. And we need to understand that the market in and of itself is a pretty volatile place. And that's why, to combat the volatility that the market doles out, is the opportunity to dollar cost average over time. And that way, as your funds go down, that's your ability to fund that up at a lower stock price. And I take that one step further, and I look to strategically buy the market when it goes down. And I typically try to allow myself the opportunity to have a little bit of dry powder on the side to give myself that opportunity to do just that. And that's a technique that anybody can listen to and anybody can deploy, right? Very simple. It just takes a little dab of paying attention. If you don't want to pay attention, set it up automatically. It's very simple to do within your account. But both strategies really do have its merit in the investing game. And it's one of those things that's not to be overlooked. It's just that I choose to deploy my capital in a little bit more of a strategic way rather than in a set schedule. Okay, but super good question. It was awesome. Dividends over time grow your yield on cost. That's exactly correct, right? So basically the cost of the asset goes down over time. It's pretty awesome. Thank you, Terry. I appreciate that. From another corner of the world that I wish I could go visit. Hope everything is well down there. I don't know. You're probably a day and a half ahead of me in New Zealand. So very cool. Thank you so much for chiming in at the end of the stream. I'm just about ready to wrap it up, but I'm just having so much fun. I only have 7 minutes left to go, and I'm just taking my last remaining little dab of questions here. I honestly missed the middle of the live stream feed, but I'll look through it and review it, as I always do when I have the chance to calm down after the live stream. But that's all it. Ryan K wraps it up. That's really cool. That was a good rep from Canada tonight, man. That was pretty awesome. I really enjoyed that. Kind of cruising up here, making sure that there's nothing here. I shouted out Map Money during the stream, and it was another one of those channel, Luna's channel, I just saw pop in here as well. I always try to give the channel creators their shout out. And then All Good. All Good is like a ambassador of the group. We got our shout outs today from Jerry's video. But anyway, guys, I'll round out the live stream, keep it under 2 hours. I didn't kind of get to the end of my lesson. That's totally fine. Actually, there's 106 people here in the live stream. So I'm going to do my top 2 per sector right now. So this is the nuts and bolts. I probably should have done it within the first 10 minutes, but I'm going to do it in the last 10 minutes of the live stream. And this will help you guys when you're determining what to buy. I kind of covered this during that lesson, but the part I didn't get to was this aspect. If you divide the market up into sectors, which is fun to do, that's your technology, financials, healthcare, discretionary staples, energy, industrials, materials, utilities, comms, and real estate. All right. Those are the 11. You'd be benefited if you could just start to kind of internalize and even maybe memorize those sectors. But I'm going to start with technology. It's my favorite. The top 2 easiest stocks to own in technology, Apple and Microsoft. Okay. Now, when you're looking at what to buy, don't come on and listen to a delivery like this and say, okay, yep, I'm going to buy it in this and that. Because I own IBM, I own Intel, I own a big position in Cisco right here. I own a position in Visa, which is technology. Okay. So be kind of careful a little bit with just, thinking that the top 2 are the end all be all. But I'm trying to give you a starting place, okay, which is important in this lesson, is that if you can take this lesson away and say, I don't know, I disagree with Ryan on the Apple and Microsoft, you can kind of determine what your top 2 are in each of the respective sectors. And that'll at least give you a starting place, okay? We proceed. Financials. For me, financials is JP Morgan Chase. And I had a hard one with the second one. I really do, because I do like Citigroup. I really do. But I did name Bank of America, which is probably going to be the next financial position that I do take. I do own a big position in JPM. Bank of America is a good one. Citigroup is a good one. I do own Wells Fargo, which I did not put on this list. But financials is another good one as well. So just start to name your top 2 in each of these sectors. You'll be benefited for it. Healthcare, one of my favorites. It was mentioned by the young investor during this collaboration. Number 1 holding, in my opinion, in healthcare is Johnson & Johnson. I had a hard time with the second one in here because I think there's a lot of honorable mentions in this category. You've got Merck and you've got AbbVie, which are really good names. There's Abbott Laboratories. There's a lot of good financials. Healthcare. I just picked up Walgreens Boots Alliance today on valuation. That was kind of an easy pickup here. I really kind of a screaming buy for me. And I was happy to own the stock. I've never owned Walgreens before. I've owned CVS, but I opted for a position today. Having acquired Rite Aid and also having access to one of the largest networks for pharmacy distribution, I think Walgreens Boots Alliance is worth looking at. But Pfizer is the one that I added there as my second one in the healthcare sector. A lot of good stuff there in healthcare for sure. You could go into a lot of different subsectors in healthcare and have a good time with it. There's really good. But J&J, PFE, okay? Top of the mountain as far as I'm concerned. Next is discretionary. My 2 favorites, this was easy. This is also one of my favorite sectors to invest in. But for me, McDonald's and Home Depot took the cake. Those to me are the pinnacle. They're the top of the iceberg. So McDonald's and Home Depot. Next is Staples. Staples, you heard mentioned a Colgate-Palmolive. I know that's a holding of Gen X Dividend Investor as well as Kimberly-Clark. I put Procter & Gamble on the top here. Probably has some valuation issues. That's totally fine. But Procter & Gamble, number 1 there, and Coke, ticker symbol KO. Obviously, Pepsi is also in this category. A lot of favorites in the staples category. Costco is in this category as well. So definitely some room for debate there on who you think is the top one. But if you're starting to look at what to buy, Jesus, I think another way of putting it is what not to buy. When you're a new investor and you're confused as to what to buy, I think going through this deliberation really gives you a lot of great options to start from. Remember, you're looking to become a participant in some of these fine companies over the course of your life. Okay. Next, energy, easy, right? You've got ExxonMobil, and you've got Chevron, two of the big players in the space. So Exxon and Chevron, that was very simple. Industrials was a little more difficult to me. Beyond the top two, there's a lot of favorites in this category. I mentioned John Deere last week, so congratulations for anybody who heard that. I, for one, didn't listen to my own advice and pick up John Deere. But my top two is 3M, MMM, and Caterpillar. Those are my top two. Then I've got materials, which is significantly less of a sector to invest in individual stock as far as I'm concerned. But the premier company in materials that I was able to find that I cover is Linde, which acquired Praxair, I believe, which was one of my favorites at the time. So Linde is my favorite, and then DuPont as well, which has just been absolutely clobbered. So I don't mind throwing it out there on this live stream as a potential. Right, I do own the stock, but again, not one of my sectors that I think you just need to rush out and heavily weight your portfolio to. So use a little scale when you're talking about your materials sector exposure. Utilities, two of my favorites that really separate themselves, and I don't want to misspeak a little bit because utilities really isn't my area of expertise. I know there's a lot of folks in the community here that do really cover utilities a lot more than me, but number one, Duke Energy. Number two, Southern Company, which are a couple of crowd favorites. I've got a couple of my own crowd favorites as well. Dominion is actually doing some exciting stuff with offshore wind right now. Really like what Dominion's doing. So I would put them third on that list. Next is telecommunications. This one's easy. Disney, number one, Verizon, number two on the list. And telecom is a really easy sector to invest in as well. A lot of variety across the board with Google, Facebook, those being new additions to the newly created telecom sector, right? Absorbing some of those from discretionary, which is where they were before. And finally, real estate with American Tower REIT and the Simon Property Group. Again, a sector that I'm really not that heavily exposed to outside of the ETF. I know there's some folks here who really like to invest in the REITs, and I'm just not one of those styles of investor. I choose to pursue my exposure through just owning the ETF and living to fight another day. So guys, with that, I'll close out the live stream, another successful one here on the Independent Investor channel. Rock on. I want to thank everybody. I want to thank the visitors. Had a couple subscribers on the collaboration tonight. Really didn't expect that, but hey, that's what makes it fun. We never know what to expect. Please consider my olive branch for future live streams that we hold here. You come sit the chair right next to me. We worked through even some technical difficulty tonight. I'm proud to do it, proud to open up the opportunity, because at the end of the day, the goal on the channel, very simple: empower one investor at a time. And that's what I believe we're doing. So with that, I will sign off, guys. Have a great rest of the weekend. Be safe, and we'll see you next Friday. Thank you so much.